Do you look at insider buys? Please say yes, because otherwise you just blew our whole segment to smithereens. But does it matter to you at all?
We look at it. It absolutely is a very good tell, especially in terms of buying. So that list you just laid out was pretty impressive. There was a lot of buying. There's more buying at this point in the cycle. The market's up a lot, but there still has been a lot of buying, less selling. So that's a bullish sign for the overall market. In terms of those companies you just mentioned, pretty impressive. We'll look at one or two of those.
Oh, thank you. I had no idea what your answer would be, but now I can stop sweating. I appreciate it, David. Thank you. You're a guy that tends to look at individual names, finding opportunities, but do you have a macro market view right now, David? I know a lot of stock pickers like yourself say, I just focus on companies. A lot of nervousness bubbling out there. Morgan Stanley saying we might have a 15% correction. You got a macro view right now?
Well, we're bottom-up guys, but we do have a macro view. We think that the market ultimately will be higher over the next 6 to 12 months, but we do expect more volatility. Now is not the time to be speculative. You really want to pay attention to fundamentals. You want to pay attention to valuation. Don't get caught up in the craziness of the day. We're a little bit wary about the ultra-high momentum stocks, the 100 PEs, the meme stocks. We think that cryptocurrency is a disaster waiting to happen. So there are things that we wouldn't speculate on. Having said that, we think there are areas that if you have a 12-month time horizon, you can make reasonable money in the stock market.
Yeah, I was reading some stuff, too, about how some of the hot money from the meme stocks has now gone into NFTs and some of the bricks and some of the other things that people are doing that are just a little more difficult to understand. But let's go to something that you do understand, and that is bottom-up stock picking. We know you love dividend payers. Dividends, by the way, don't get as much love as they should, nor does Bank of New York, BK. Why not?
Well, Bank of New York is a real good company, very good long-term prospects. They are impaired by lower interest rates. If interest rates are moving up or going to move up over the next 6 to 12 months, Bank of New York is a direct beneficiary. The stock's had a pretty decent move in the last month. We think it's just the beginning. We think the stock easily should be 20 to 30% higher. Very low risk in the meantime.
GIS as well, General Mills, again, a big company. Everybody knows their products, but not a stock. I watch CNBC all day long, and it's not a name that I really see ever come up outside of quarterly earnings. What are you seeing out of the Minneapolis company that you like?
Well, consumer staples right now is like watching paint dry. They've really had a fairly miserable 12-month period. They normally sell at a premium to the market, or at least at a market multiple. As a result of their very dull performance over the last 12 months, the whole group is now selling at a decent discount to the market. General Mills has reasonably good long-term prospects, pays a 3.5% yield, and it's at 15.5 times earnings. So we think if the market ultimately slows down, this is going to be a good place to make money and be more protective. We like others in the group, like a Kellogg or a Coca-Cola as well.
Sometimes watching paint dry is fun. Just depends on what you've been doing, I guess. David, finally, Truist. It's a name we see a lot advertised because it's a new name, but it's the combination of, what was it, SunTrust and I think Regions Financial. So Truist. Yeah, BBT, that's right. Thank you for correcting me there. That's why they're marketing, because it's they got one of these new fancy names. But you just think the stock is kind of, again, underloved.
Well, they're doing everything right except changing the name, which we sort of take issue with, because why do you want to do that when you have two great brands? But having said that, there's going to be a change in the CEO in the next 12 months. We think that's going to be very good for the company. It's at a very, very attractive valuation. The Southeast is one of the fastest growing areas in the country. You're getting a 3.5% plus yield. A lot of good things. When interest rates go up, we think it's very good for it. So it's a great place to put new money.